So, welcome to another Florida home buyers show with Brent and Lee. Tonight we're talking about the hurricanes. Obviously, we've had this horrible hurricane, so we're keeping all those people in um, the West Coast in our prayers right now and our thoughts. So we're going to talk about hurricanes tonight, and we've got some great information to share with you on what's happening with hurricanes, what's been happening with hurricanes, and what we can expect in the future. Also, we're going to go through what Florida's doing and their ideas about, making these direct hits less intense on the areas that they're hitting. And then we're going to talk about the insurance in Florida because that is definitely about to become an issue. And then we're also going to share the market with you. But to get started, we're going to have Brent talk a little bit about rates and what's going on there because it's definitely affecting the market right now. But before we get started, if this is the first time you've been to my site, my name is Lee Brickey, and I'm joined with my good friend Brent Starts from Unitas Lending. And if you have not subscribed to our channel, go ahead and slap that subscribe button, ring that notification bell so you don't miss any of our real estate tips and tours. And let's get started. And if you're tell us where you're coming from, drop a comment in the comment section and tell us where you are. And then if you have any questions or concerns on anything we're talking about, go ahead and drop that in the comments because we're going to answer all of your questions that the best we can. So let's get into it. So Brent, what's happening with the mortgages right now, loans? So we've got a slide we can share right now. So it says, oh, I got the wrong screen on. Hold on. Let's see. I got to share my screen here. Sorry.
No worries. Well, Lee, it's great to be back. First of all, after a week off,
Yeah.
So we had our power's out for about 24 hours in this area. Not hit nearly as bad as we were on the other coast, but
right. We had some power out around here too. The storm got the rain bands. If you're not in Florida, after 35 years of being here, were some of the worst I've ever seen. Widespread. So this thing affected the entire state of Florida with the rain bands and the tornadoes and then the flooding. Orlando's still dealing with flooding right now, so it's not a good situation. Yeah. So this just hit the October 3rd from the Board of Realtors, and it says coming soon, a big hike in most loan limits. Loan limits will likely be 12 to 13% higher starting January 1st, 2023, since inflation impacts FHA, Fannie Mae, and Freddie Mac numbers likely to announce November 29th. This article goes on to talk about loan limits will exceed $1 million, Brent. So
that's right.
Yeah.
Yeah, we're actually the investors that we work with. Many of them came out with a new conforming loan limit of $715,000 for the standard conforming loan limit for conventional loans, and for the high cost areas, it's a little over $1 million. Now, we can accept loan applications today at $715,000 for a single family. And it's probably going to be slightly higher. You're correct in saying 12 to 13%. They estimate it's going to be closer to $724,000 when the figure is actually released. It's usually right after Thanksgiving weekend that they release that figure for the coming year. But they're accepting loans at that rate, or $715,000 now, because most of those loans, as you know, are packaged up and sold, within 3 to 4 months following the loan closing. So we can safely start to accept those applications now.
Awesome.
Yeah.
Awesome. And so I got a comment last week from someone watching one of my videos. I think it might have been one of ours that we did together, and it said, man, this guy was wrong about the rates. And I can tell you that the whole industry was wrong about mortgage rates. I mean, no one expected mortgage rates to be this high at
Mhm.
here. And, where do you see this going, Brent?
Yeah. Well, we watch this very closely, obviously, because the volatility right now in the marketplace is just it's like I've never seen. When COVID first hit, is the only thing I can compare it to as far as the amount of rate shifts, even intraday. In other words, in the middle of the day, rates going up and down. Today we had a couple reports released. The ADP report came out today showing, it's kind of a precursor for the jobs report, which is coming out this Friday, which is a market mover. Because the reason the Fed and the economists haven't called a recession officially is because of the employment rate. So everyone's watching employment very closely right now. It's noteworthy to mention in July to August, over 1 million job openings vanished. So there were like 11.2, I think, million jobs nationwide in July available. August figures dropped to 10.1 million. That's a significant reduction in the number of open jobs. So typically the way the cycle works is, first, open jobs decline, and then hours are cut, and then we see layoffs. And a survey was released today where 50% of all, CEOs surveyed are already planning layoffs. They're planning for a recession. 91% of them said they expect a recession, and 34% of them indicated they felt it was going to be a prolonged recessionary period as well. So the CEOs are planning for this as well. Now, what interest rates have done clearly is based upon the inflation, and so that's the flip side to the Fed mandate. So in other words, they're trying to balance inflation, an overheated economy versus recession, an economy that slowed down too much. So looking back, we're seeing, you're looking in the rear of your mirror, the Fed numbers that they use, they're looking at, where was GDP 2 quarters ago? You know what I mean?
Right.
And so, it's problematic because, looking forward, we're seeing that CEOs, the number of job openings, all those types of things indicate that things are definitely slowing down, and they don't want to overshoot the mark. They really, the rate increases that they've done have already significantly impacted interest rates to a point where it's beginning to be problematic. Where it's affecting affordability, and that's not something they want to get into. They don't want to,
Right.
kill the market either. So we're anticipating, rates. We didn't think they'd go to 7. We really thought they were going to cap out around 6.5, where they were like in mid-June, and we were up around 7, and now we're back into the 6s here the last week. Where we're backing off. The 10-year Treasury is a guideline as well. So we're seeing where, interest rates are coming back off of that high we saw about a week and a half ago.
Right. And that's this chart right here, right?
That's exactly right. Lee, that's the bond chart that we look at every day. Each candlestick, if you're familiar with the term, it's a candlestick chart. And
That's
so
this right here, right?
exactly. Yeah, if you can use your cursor a little bit there, that's an individual day. A red day is a day that the market went down, the bond went down. That means rates are going up. There's an inverse relationship. So we want to see the bond go up, not down. That's a good day for interest rates. If you look at the wick, and pick a wick out, if you know what I'm talking about, there you
Right.
go. So there's the body of the candle. On a green day, it means it went up. So the base of the thicker part there, that's where it started at the beginning of the day. Okay, so if you go to the
Mm-hmm.
base of that green right there at the base of it, you can see where that's where the rates started that day, where the bonds were priced. It went as high as the top of that wick. If you go to the very top, it touched that resistance level. So that's a line of resistance. And you notice as soon as it hit it, it turned back down, and it closed at the top of the thick part. Okay.
Right. Okay.
During the course of the day, it rode down as long as the lower wick. If you look down, you go very
Right here, yeah.
exactly. So that's the low of the day. So that's an extremely, um, volatile day where rates are going up and down, intraday price changes, that type of thing. So we watch this in real time, and I have text message, email, and a voice call that's triggered when we have an alert to lock or alert to float. So we'd be floating on that day, right? Because the market's starting to improve. And so today we had a tougher day. That the last day there on the end, you can see where
Right.
that, but we're still in that. And I drew the those highlighted yellow marks, you see the trend was going down, the bonds rates were going up, and now we're starting to see where the bond wants to recover and it wants to bring rates down. This is the last 5 or 6 days where we've seen a reversal. So we'd like to think that lower wick there, that red and green day there, 5, 6 days ago, was kind of a potential top for interest rates at the 7 1/8, 7 1/4. And now we're, like I say, we're back down in the 6s again. So we watch it in real time and we pick the sweet spots to lock your loan. And that's how we do it.
Right.
Yeah.
Right. So on the other page, you had the 2-1 buy down. There's some arms coming out right now, yeah. I've heard. Talk a little bit about that.
Great point. Lenders want to lend money, right?
Right.
I mean, and they're going to try to figure ways to do that. And so they need to invest funds that pension funds have available for investment, that type of thing. And so it needs to find a home. So one of the strategies is to do a 2-1 buy down. And what that is, it's a seller concession. We're seeing those again, Lee, where people are starting to, sellers are starting to say, hey, I still want my price. I don't want to reduce my price, but I want to help, sell my home more quickly. With affordability starting to become an issue, one of the things that lenders come up with, they do these 2-1 or 1-0 buy downs. And basically with a seller concession towards closing costs, they can use that to buy the rate down 2 points in year 1 and 1 point in year 2. So do you have that example, Lee, that chart that we had up just a second ago?
I don't know if I can get back to it. Hold on.
Okay. So
let me see here. Here we go. Here, I got it now.
You got it?
Yeah.
There it is. Yeah. So that's an example. A loan amount of $495,000. A purchase price, actually it's $596, I believe. The reverse there. So, but yeah, the interest rate is 6.99. We just pulled out a figure that was a good solid number. Where interest rates are conservatively on a 30-year amortization, number of payments per year, 12, and a monthly payment of $3,200.89 per month for 30 years, 360 payments. If you notice down the next section there, the 2-1 buy down is where the seller contributes towards the buyer's closing costs, buying the year 1 rate down to 4.99. Okay.
Right.
So to give you an idea what the savings is, the normal payment's $32.89, but the buy down payment is $26.54 with the savings of $635 per month for that first 12 months. So the annual savings is $7,600, over $7,600. In year 2, the rate is 5.99, so a savings of $325 a month. That second year, with a total of about $3,900, a total of $11,532 in savings for that buyer in the savings in their loan payments. So the cost of that would be a concession of 2.912%, so just under 3%. So if a seller can make a 3% concession to help the buyer out, it does a couple things. It gives them that lower payment to get into the property where they can find it affordable. Most people believe that they'll receive a raise. Their income is going to increase. So It helps them, you know what I mean? That's the mindset of most people. And most people are their career advances, that type of thing. So it's something, and it's not an adjustable loan. This isn't an adjustable where it can go crazy. This is just a fixed rate for the first year, a fixed rate for the second year, and a fixed rate year 3 through 30, the fully amortized payment on the last 28 years. So this helps people get into a home. It helps them, the seller, to sell their home because it makes it more affordable to the buyer. And a 1-0 buy down is very similar. You're just using that 1 year concession. So the first year is 5.99%. So it's just buying down the 1 year. It's under 1% concession, but sometimes it helps that buyer, get into a home and an affordable payment. Lee, one strategy on this, we believe that rates are going up certainly now, but the Fed hikes are pretty much baked into the mortgage rates now. We know they're going to go about another 1.25 points. That's pretty much baked into mortgage rates already. That's an assumption that in the next meeting it's going to be either 0.75 or 0.5% Fed hike to the Fed funds rate, and the following meeting in December it's either going to be 0.75 or 0.5 for a total of 1.25 between those next two meetings. And at that point, they're going to have a stop and look and see. So a lot riding on this jobs report coming up on Friday, and in the coming month, as well. They look really close at the ISM index.
It looks like, though, just to cut you off, it looks like the only companies that are laying off are these tech companies, though.
Right.
And they're
right.
laying off the people that don't want to come to work.
Right.
So, they were actually talking about it on the business news the other day, that it's much easier to fire somebody who's, on a Zoom call than it is face to face. And that's really what's happening. They're firing people on Zoom calls.
Right. Right. They're seeing that, and lenders have certainly cut back. We're seeing that in
Right.
our industry, but really that's really all we're really seeing. The job
I mean, the
posts are
job
dropping.
market seems to be pretty strong still. That's the problem.
There's still 1.7 jobs for every job seeker.
Right.
There were two jobs for every job seeker here just a month or so ago, and so we're seeing that drop, which is the first sign. So looking forward, we're seeing things slow down. There's no question about it.
Right. Right.
Yeah, but like you say, still 1.7 jobs for every job seeker is still a pretty strong jobs market.
Right. Right.
Yeah.
So, just to play devil's advocate, we've been saying that, hey, it's the rates are baked in, to the increases, but rates still keep going up because people keep going to the bond market because the stock market's so bad. So I think that's the problem we're running in, is the asset markets are just taking a hit right now.
All the way around.
One day they're recovering a little bit, and then they take a hit the next day.
Mm-hmm. Right. Well, you look at,
and the more people run to bonds, the more it's going to run up rates, right?
well, it increases supply, so it can help a little bit on with if stocks are getting hit a little bit, actually can help interest rates,
Okay.
because it's a run to safety. It's a safety haven, so it gives us more supply, and so they can lower rates actually. So that's the dynamic. It's kind of interesting how that works. But yeah, prices of bonds go up, and so it's an interesting dynamic. But right now, it's you've got a serious inflation problem. It's clearly elevated, and we've also have a situation where the economy's definitely cooling, but employment's strong. So it's a unique thing. I think there's just a lot of I think as we see the pullback in the stock market and other assets. That wealth effect, and when people see their homes start to flatten out, first of all, they're not going to see, 20% appreciation. It's a real dangerous mindset to get into, that my home goes up 20% a year.
No, I mean, the consensus is right now that people are going to see probably a 5% decrease in certain markets, and maybe a little bit more in others.
Yeah. I think Florida is going to, certainly level out, and we're not going to see anywhere near the appreciation we saw the last couple of years.
Right.
I think you buy a home now because you want to see 4 and 5% of appreciation year in and year out for the next 10 years. I think that's
Right.
safe to say that's what we're going to see, over the long haul.
Right. Well, we'll get into the homes in a little bit. Let's talk a little bit about the great state of Florida and how well they've done with with this hurricane and what's happening, so that folks that aren't here in Florida, we're going to share some video with you, some ideas. But something I heard this morning, which I think is awesome, and I've been here for a while. Andrew was one of these hurricanes where everybody just rolled into Miami, pitched in. And, that's pretty much been with every hurricane, but this one is such devastation. Most people have been watching on the news, but it's nothing like when you see there. But Wawa's was on, the regional manager of Florida was on today talking. They're raising up to $1 million for the hurricane relief, Ian's relief. So they've already guaranteed $500,000. So if you're in Florida, you have a Wawa close to you, this is a really great thing. So from October 4th to the 16th, any customer coming into Wawa can add $1, $3, or $5 to their purchase to help the American Red Cross, and then Wawa's foundation will match the first 250,000 of that. So they're gonna, if everybody kicks in, throws a couple of bucks at it, $1, $3, $5, it adds up very, very quickly, especially all the people going to Wawa. Hey, listen, the gas is super cheap there. Also, they have great food. My son's a cop. They actually give him free food. They're giving food away to people. They're giving gas away. They're helping people. The people in Wawa on the East Coast are driving all the way across to the West Coast to help out with the stores there, getting them back up and running. They've got the gas stations back up and running where they're actually, that was a big problem with the Dorian when it hit. We could getting the gas stations back up. They got most of the gas stations back up. So the governor and the president were here today. It was awesome to see politics get set aside and
Yeah.
people, being the most important thing. And that's what's happening right now. And in the state of Florida, I can tell you that every news station has nothing but good things to say about our governor right now, and
Yeah.
everything that he's doing, because we've got the National Guard in, we've got the Army here, we've got, all of these churches and organizations down. Graham's got his organization down there. Our church that we go to here, Christ Fellowship, they're down there taking generators to people, and just, everybody's just kind of, converging. The Board of Realtors has, for Florida, has a fund where you can give there. Red Cross, you can give there. So, these people are devastated, man.
Yeah, it's incredible. I went to a Bible study last night, and about 3 or 4 guys went over there for 4 days, and just helping people clear out their homes and things like that, and off their yards. And just in our community, there's a lot of debris around, and just everyone helping everybody clean up. But within 24 hours, our whole community was completely cleaned up with neat stacks and on the street ready to be picked up.
Right. Yeah, we had the same thing here, man. I mean, but
Yeah,
some people lost, their homes, their screen
yeah,
enclosures, their fences, all kinds of stuff everywhere. But
yeah,
over there, I mean, they only have bridges to get to the island. They're doing some temporary bridges they'll have up by the end of the week,
yeah,
so people can get on and off the islands over there. So here's some other stuff that just came out. Anyone that's been affected by the hurricane in any of the states, can Fannie Mae, Freddie Mac, and FHA programs are providing help to homeowners because they still had to pay their mortgages. Self-employed are eligible for unemployment aid, and waivers can speed up flood relief to homeowners who actually have flood insurance. And I say this to all my clients: if you're buying a home or you own a home in Florida, get flood insurance. Like,
yes,
I just closed on a house today in Port St. Lucie. They're not even close. They're in, we actually closed on one in GL
Riverland.
there at
Yeah,
Riverland, and, beautiful home, beautiful home. So, but, they got, I said, did you get flood insurance? He's like, yeah, it was $300 extra a year. I mean, you're
right,
not in a flood zone. It's peanut money. You never know. You
right.
never know. The lake could overflow. A water main could bust in front of your home, flood your garage. I mean,
Hmm.
you could be in a storm if you don't have impact glass. A window breaks, and just a regular storm in the wintertime sometimes are like tropical storms, Brent. So,
Yeah,
having this homeowners and flood insurance is something you want to do, because what's happening now is a lot of these people didn't have flood insurance because they were so far away from the water, and there was 18-foot storms surges. And then in Orlando, they didn't even lose power, but the river overflowed a couple of days after the hurricane,
right.
and now all these people's homes are flooded and they don't have flood insurance because they weren't in a flood zone. So
Yeah.
You know, it's something you want to do no matter where you live. I say get flood insurance. It's definitely something you want to do. So moving on,
Yeah.
let's talk a little bit about these hurricanes and some things that are going on, because I just put out a video, and obviously it was a little bit of fun on, you know, New York, New Jersey moving to Florida because all these negative articles. But one of them is hurricanes, right? People aren't
Yeah.
going to, you know, we're going to get destroyed by hurricanes. So it really depends on where you live, if you're going to take a direct hit. And this guy is a hurricane chaser. I saw him on the news the other day. It was the day after the hurricane hit and it was moving across the state, because a lot of people thought this thing was going to hit Tampa, right?
Right.
And so you know, he's a meteorologist, Joe Bastardi, right? You know, and you know, a hurricane had the last hurricane to directly hit Tampa was 1921, and then this video he talks about, you know, why, you know, hurricanes that come up the Gulf and hurricanes that move up the East Coast, why they don't. So let's listen to this real quick.
But you want to know why this is very, very difficult to happen.
Hold on, I'm sorry.
And you saw it with Charlie, because when a storm is moving parallel to the west coast of Florida, the vectors around the storm change. And we see this, and there's actually papers on it done with typhoons in Taiwan, that the frictional effects, if a storm is moving to the right of an island, parallel to it, or the right of a peninsula, it will pull it in. And once it gets in, guess what it does? It goes looking for the water on the other side. You notice how hurricanes, when they're to the right of Florida, tend to stay offshore. Matthew, Dorian, remember how they stayed offshore?
So, you know, that's happened, dude. I mean, so, you know, I've been here 35 years. Palm Beach County's never had a direct hit.
Right.
You know, the only thing
right.
It's always come up from Miami. So we had the 1 year where we had Francis and, you know, come up, and what was the other hurricane with that? I forget, but 3 came up that year. Can't think of it right now. It's the end of the day. We're tired. But anyways, 3 came up that year at the same time, but they came straight up the peninsula, right? Right up land. But when they come off of the East Coast, they tend to kind of skirt down the side. We had one a few years ago that just skirted down the side of Florida, and you know, we just got tropical storm winds, but it stays on the other side of the Gulf Stream. A lot of people don't know the Gulf Stream's only 4 miles out here, and that creates another barrier for these hurricanes. Also, you know, when they're coming straight at us, they hit the Bahamas, it tears them apart, right? So we have the Bahamas. So that's something that, you know, people are talking about, that it keeps the hurricanes from moving inland. But when they come up that Gulf, they're going to make landfall, you know, against Florida. And he said that, you know, he went on and on, but he went a little bit further talking about, you know, their models showed it hitting the same place as the last hurricane did, because of, you know, it's wanting to move into the land, and the odds of it hit Tampa are very, very slim. But if it did hit Tampa, it would have devastated the city. So the next video I want to share with everybody. This is a show I record every week. It's called The Point with Michael Williams. I like this guy. He's real fair and balanced. A lot of politics. They talk on local politics and stuff. But he had this guy Dr. John Rennie in, and this is really interesting for everybody to take a look at this one. This video is pretty good.
So really mitigate against what we saw there. You have a
so let's turn it up a little bit. And
Category 4 storm, Gulf of Mexico, shallow Gulf, pushing the water ashore.
Hear that good?
Speak specifically to us later about what we'll have to do to try and make sure we at minimum mitigate that from happening again as they rebuild.
Yeah,
I mean, specifics.
Yeah, so specifically, there are a number of different localized interventions and adaptations that could be made. Raising properties is one of them. So when we build new structures, rather than build them at ground level, raising them up 10, 15, maybe 20 feet and creating a landscape around that so that way it doesn't look obtrusive. And we see that here in West Palm Beach, actually, with a lot of the new buildings along the intercoastal. Also, there are different flood control measures that could be taken, building new land, creating more wetlands, the ability to absorb that storm surge. So
man-made barrier islands.
Man-made barrier islands. They provide multiple benefits in terms of ecological habitat, and they slow down the storm surge as it's coming. So there are a number of mechanisms.
As we come.
So I mean, these are all good ideas, and it's actually something that that is not far-fetched for the, Florida's been talking about this for a while.
Mm-hmm. Yeah, Lee, one thing too, I mean, is some perspective, right? I think it's good to keep perspective because someone that's not living in this area hasn't seen a few hurricanes come through, that type of thing. This is a 1 in 500 year, event. You know what I mean? That's
right.
that we saw. And that's, so
well, we're seeing less hurricanes, right?
Mm-hmm.
But they're more intensive.
Mm-hmm.
So I saw a study the other day. I mean, just to be honest with everybody, the water is, there is global warming. I mean, it's happening, right? I mean, I don't know what we're going to do about it, but it's happening. The water is getting warmer. And so over the last 20 years, we've had more Cat 4s and 5s in the last 40. So hurricanes are intensifying, but we're getting less storms. Like this year, I mean, it was very dry.
Mm-hmm.
If little hurricane trivia here is hurricanes start at the equator in Africa. If there's a lot of sandstorms, then you have less hurricanes. So we had a lot of really dry weather, and we had a lot of Sahara sands in the air. It just tore Henry up. I mean, I've been dealing with skin issues with this dog. I mean, we had to go to a dermatologist and a lot. And then I was hearing from the vets that it's been a lot. So there's a lot of dust in the air. So that takes the moisture out of the air, dries the air up, makes it harder for hurricanes. So we rolled into September. We started getting all this rain that we desperately needed. And all of a sudden we end up with a big storm out there. So, and there's a couple of little tropical situations going on right there now. But here's something else they talk about, and this is the Naples city manager. So Naples is right at the end of the peninsula, right by the Keys. The last hurricane just damaged the Keys, Miami. It just did the same thing. It clipped across the side of Miami, hit the Keys, and then hit Naples and Marco Island, just like it did this time, and just devastated it with storm surge. So we've got the same thing going on over there. So I want everybody to hear what the city manager talks about here, because these are good ideas that are happening right now. And so, you're thinking about moving to Florida, you want to be on the West Coast, but you don't want to be, flooded out. These are the things you need to be looking for. So
should hear from the Naples city manager who had a long career on Palm Beach as well in administration, now the Naples city manager, Jay Budishwak. And he talked to me via Zoom, and he talked about the fact that even before Ian, they realized they needed a different outlook. Now they're going to have to try to put it in place. Let's listen.
We're actually into the process of developing our adaptation plan. It includes everything from base flood elevation for home construction, hardening the Gulf of Mexico, hardening our infrastructure on the bay side with higher seawalls. There's a myriad of things that need to be done, and it's not going to be cheap. And it's not going to be cheap for Naples. It's not going to be cheap for any community that is in South Florida. We were heading in that direction regardless. I think this storm really kind of underscores and puts an exclamation point on the fact that what we are doing in terms of getting prepared for the future by developing this plan is important and needs to happen fast.
So you can see the damage. I don't know. I didn't do that, did I?
That's all right.
Here. So everybody heard that though, right?
Yeah, you could hear it.
Okay. So you see, you know, and let's like kind of roll through this a little bit here. Like, I mean, you can see the damage. Look at this.
Yeah.
I mean, this is Naples. This isn't a direct hit.
Right.
This is a hurricane just coming across, and this is getting the wind, the bands off of it.
Mm-hmm.
So, I mean, you know, this guy's talking about, you know, creating a situation where we have, you know, seawalls. I mean, I don't understand why the West Coast doesn't have seawalls.
Mm-hmm.
I mean, honestly, I mean, you've had all these storms, so that's something they're talking about doing is building these seawalls all the way along the West Coast. So at least when these storm surges come in, they hit that seawall, and it makes it harder for the flooding to happen. Also, you know, building the homes on stilts, putting in barrier islands, you know,
Yeah.
trying to get something to, you know, to help, you know, stop this flooding, because, you know, the Miami-Dade code in Florida is the best building codes in the country. We can build a house that can sustain. They can put it up 10, 15 feet, like you said, with stilts, and put impact glass in that concrete construction, strap the roof, put a metal roof on it. And I mean, that house is, I mean, it'd take a lot to tear it down.
They
I mean,
drop pylons down to the bedrock.
Oh, dude, it'd take a lot to tear that house down.
Yeah.
So with that being said, you know, when you're you know, with that kind of stuff going on, you start, but you know, you're going to make sure the house doesn't blow down, but you're going to have a problem now with the flooding. And that's what we're really seeing is the flooding. And that's why people died from these hurricanes is most of it's from the flooding, you know, one of the things they say in the interview is, you know, when the wind comes, run and hide. When the flood comes, run for your life. Right. You're not getting away from the water. And for people that don't live in Florida and haven't seen this happen. So Tampa has the Tampa Bay, right? It's the storm surge last hurricane, Dorian sucked all the water out. A manatee was actually laying in the bay. They had to go pick him up and carry him out then they're 2,000 pounds, like picking up a cow and carrying him out and putting him in the water. So it was like a big ordeal getting that manatee out in the water. But the same thing happened, and it happened like when the hurricane was not even halfway there. It was still in Naples, and it's sucking all the water out of Tampa Bay. So all that water's coming back, and it's coming back with a vengeance.
Right. It's like a tsunami. I mean, it's you know, if it's similar.
It's scary. Yeah. So again, you know, if you move to Florida or you're living in Florida and you're there, you know, you're anywhere in anywhere in the spaghetti models of a direct hit, get out.
Yep. And also know your elevation. You know, that's you know what I mean?
Yeah, know where you are.
Know where you are.
If it's coming on the West Coast, go to the East Coast. If it's coming on the East Coast, go to the West Coast. You know, get away from it. But so that, you know, this is losing life, you know, because we're not evacuating is we've got to evacuate. People have to get out. You have to get out. I know for us, you know, we've left with Cat 3s just because the fact that, you know, we don't want to deal with the aftermath of it, the electricity being off and everything that comes along with that. So, you know, hopefully, I think with Florida, you know, people are going to keep moving here, right, Brent?
Oh yeah, absolutely.
We're not going to stop. I talked to a real estate agent in Boca, and she says she has a friend of hers over in Fort Myers, and she literally has clients calling her from up north asking, Aren't there any deals? And I just had a client text
Yeah.
me and say, hey, because of the hurricane, do you think the prices are going to come down in Florida? So we're going to talk about prices in a minute, but they're not coming down because of hurricanes.
No,
But you know,
this impacted the whole state,
this impacted the whole state,
but a very, very different ways.
in a very
Yeah.
different, yeah.
Yeah. I mean,
So I hope the government, and you know, and I will tell you, probably one of the best things that came out of this is the a lot of the representatives of Florida live in these areas where they got hit the worst. And so these people are going to go back to, you know, Tallahassee, and they're going to start making some laws, and that's what really needs to happen. We need to rebuild stronger, better. We're going to have to take care of these people that were living in these mobile homes and parks and so forth that just got totally devastated, and put them in homes. You know, there's going to have to be some, you know, when they start rebuilding, there's going to have to be some affordable housing built for retirees. I mean, we don't, you know, we want to take care of Floridians, and the governor has said that he's going to do this. So we'll see what happens. I have a lot of faith in Ron DeSantis.
He did a great job. I mean, they had tens of thousands of linemen, set and ready to go. And
I mean, we had 8,000 people out without power, and by the next morning, everybody in Palm Beach County had power, and they've restored so much power, it's unbelievable. I mean,
everyone was staged well in advance, and then they deployed them, you know, from the Tampa Bay area down.
No, I have to tell you, the Red Cross, the federal government, FEMA, the governor. I mean, everybody has come together, and I think this is one of the best responses to a hurricane we've ever seen.
I've ever seen.
Yeah. And I honestly think it's, you know, DeSantis was able to pull it together early, got with FEMA early, you know, and then they were, you know, as soon as the storm was gone, they were out there, you know, finding people and trying to get people, you know, out of their homes that had stayed behind. And I can only imagine how terrifying that was, because I mean, this thing was almost a Cat 5. I mean, I remember telling Lisa when we were watching it, and it was coming up from Naples, and we were getting the rain bands, and you could see it was a Cat 3, and you could see how well defined the eye that hurricane was, and those rain bands were the most vicious I'd ever seen, with the tornadoes in them. So. Yeah. So definitely something. So what's next? Property insurance, right? I mean, here's a real problem. This is a problem with property insurance. We, you know, we're losing. There's 6 insurers this year have become insolvent, right? So what's causing this, right? So we'll cover that first. The roofing companies. So I have a client right now, 4-year-old roof, has a leak on the corner of the roof. The roofing company is calling the insurance company and wanting to make a claim on that roof. And it's 4 years old. I mean, this is the problem we're dealing with. The insurance companies have had to fight these roofing companies and people in court. It costs them a lot of money. We don't have any really large insurance companies. They're mostly smaller companies, and the state insurance company can't handle it. So it's caused a problem with insurance. So there are some ideas out there. Again, we got a little video we can watch. Everybody gotta make sure I got that on. Let's listen to this. Because there's some good information in here about what's going on with insurance. We try to get Barbara on tonight. She's too busy with insurance. So,
right.
Well, we're going to get her on one night with her
soon.
Well, I hope, you know, one of the lessons I think we learned from Hurricane Andrew, where they created Citizens Insurance originally to be that insurance company of last resort. But the other thing that happened after Hurricane Andrew was the big insurers, State Farm, Allstate, those kinds of insurers, left the state. They're happy to take your auto insurance money, but they're not interested in insuring your home. And so we wound up with a lot of very, very small insurance companies that depend a lot on reinsurance, which cost a fortune, and many of them have gone under. You know, some legislators after Andrew thought that the right thing to do was that if you want to sell insurance in this state, you have to sell everything, which meant that State Farm and Allstate couldn't leave the state. Maybe there has been some suggestions in recent weeks, actually, that we go back to that kind of thinking. There's been some talk that you turn Citizen Insurance into strictly a windstorm insurance and let all the other aspects of insurance go to other companies.
So ideas, right?
Yeah.
But you know, they're going to have to come up with a plan for insurance. I know DeSantis is working on it, and it's something that's at the top of the list. But there's got to be. We're going to lose some more insurance companies over this for sure.
Yeah. Yeah.
Floridians are going to pay more on their insurance. I mean, on a brand new home right now, impact glass, new construction, you're at about $2,200 to $2,400, depending on if you have a pool or not. Right.
Right.
So, and depending on the size of the house. But when you start getting into homes that are 10 years old, you're looking at $4,000, $5,000 a year for your insurance, which, you know, coming from another state, it's a shock for people.
Right.
You know,
I always tell people that's the one thing that's different. You know, I lived in Ohio, you know, moved from California here 12 years ago. And so it's a difference, you know, you have to weigh it as a consideration, certainly. I mean, there's no state income tax here. Obviously the cost of living is much less in some of those areas, but it is a consideration, certainly.
Right. And when you look at this flooding and devastation, man, it's just so sad.
It is.
It's, you know, and these poor people have lost everything. I mean,
you know, there are a lot of
I mean, just
homes
look,
that are grandfathered
just
in.
look at that. I mean,
Yeah.
those are shrimp boats.
Yeah.
I mean,
up like
they're just
toys.
piled on. Well, the storm surge just pushed them all inland.
Yeah.
They're just piled on top of each other.
Yeah. I saw
You
50.
you can see the sands all the way across the island. Again, JW Marriott and you know, in Naples there, it's that JW, the pool's completely full of sand again. I mean, with the last time it was completely full of sand. So,
Yeah.
you know, it's just absolutely
Yeah.
terrifying. So,
Yeah. It's a wall of water hits you, you know, you have to respect it, you know.
right. So with that being said, you know, let's talk about the market. So
Yeah.
the market is definitely changing. My opinion is we're in a buyer's market right now. So if you're a buyer, now's the time. I mean, so here are the numbers from Martin County from August to September. You can see, you know, the little, it's showing more of a neutral market. August, we had 747 homes for sale. That dropped to 726. With that said, you can see the amount of homes that sold dropped. And the number of days on the market has definitely increased. And I'm going to tell you, anything over 300,000 is sitting on the, I mean, in Jupiter, we're 45 days, 60 days, 90 days on the market right now. So, and then you can see that the asking prices, you know, you still have some homes selling over asking, but I would say that those are, you know, pretty tricked out homes, but you're seeing more and more homes selling under asking price. So price drops are happening. We dropped the prices on 2 of our listings. I'm seeing price drops all over the place. So, you know, I would say that depending on where you're buying right now is going to depend on, and depending on the price of the home is going to depend on how much the home drops in price. But moving on, Port St Lucie, number of homes for sale last in August were 1,600. That dropped by almost 500 homes. August, you had 382 sales. September, you had 252 sales. And then you can see last year days on the market were 12. We're at 24 now. So the market's we're in a neutral market, and we had 120 homes in Port St. Lucie sell under asking price. So a lot of this is overpriced homes. So I don't want to freak everybody out, But if you're
Mhm.
selling your home now and your home is overpriced, you're going to end up dropping the price on it. And I would say in certain markets, depending on where the house is, I think Port St. Lucie is going to hold up as a market better than Palm Beach County, because depending on where you are in Palm Beach County is going to depend on where you're going to see the most price drops.
It's affordability issue, I think.
Absolutely.
Yeah.
I mean, you're talking about most homes in northern Palm Beach County, Palm Beach Gardens, Jupiter Farms, North Palm, these Tequesta, these markets, the average price is $1 million.
Right.
So there's just not that many people out there right now that can swing $1 million home.
Right.
So, and then when you look at Palm Beach County as a whole, August we had 10,000 homes for sale. September we had 9,900. So a little bit of drop in inventory, but August we had 2,000 sales, and September we had almost 500 home sales less. And then we're still sitting about 30 days on the market, but I can tell you, like, this
That's changing.
This is changing every month. Yeah, I mean, I would I would say by January we're in a full buyer's market.
Mm-hmm. Yeah, I'd say that too. The pace they're at now, how it's just kind of slowly turning. It's about a 3 or 4 month period to totally flip it. Yeah.
Are you seeing that houses are still appraising for selling price, or are they starting to be more conservative and come in lower? I haven't seen that yet. I mean, everything that's priced out there right now, Susan, is priced is most people are priced in everything I'm looking at. I could comp it.
Right.
I could, I just dropped $40,000 on our house in the listing we have in Port St. Lucie and Manderley, and I could comp it at the 40,000 higher. She just needs to move. So,
yeah, some I'll tell you what I'm hearing from appraisers is they're looking at listings too. You know what I mean? If their listing price is lower than the last comps, that's problematic for the appraiser to come in and justify it. So it could happen. But
right.
It's not a problem yet.
Right. But I think that we could see, look, if prices come down 5%, even, you're really not affecting much of the market. Even if they come down 10%, people still have, if you've been in a house for 2 years, you're still going to have a ton of equity.
Oh yeah.
So, so I think what's going to happen, and we went through this last week in our show. So if you didn't watch it, we'll leave that show at the end of this show. But, we went over what, Black Knight's talking about, and some other experts out there right now. And, they think that, we could see price drops anywhere between 5 to 10%, depending on where you are in the US. And, especially, I hate to say it to people, but if you live out west, Loxahatchee, out, North Lake Boulevard, think about where the market was before COVID. You're going to start moving back to that. And that's really how I've been trying to help people buy homes is, especially rolling into this year, middle of this year, and we're starting to see, prices starting to come down, is, hey, let's look at where we were before COVID and that market there. And, that's how you want to put your offer in, because, a lot of these people, buyers believe that we're in a buyer's market, which I think we are. And sellers still think that this could be a seller's market. Now, we're moving back into season. So the last 2 months of typically every year are going to be slow, and you're going to see the numbers here. New home sales jumped 28% in August. And I'm telling you, they're up in September. I've talked to all of the new home, all the builders in Port St. Lucie are just, they're busy. But with that being said, they're giving these huge incentives. Here in Palm Beach County, it's not as much, but there's big incentives. And then these houses that are $1 million, they're giving, up to $200,000 worth of incentives. Toll Brothers at Avenir off North Lake Boulevard, right across from Ibis, which is, what would you say, Brent? Probably no traffic, a 20-minute drive.
Yeah, probably something
95 with
yeah.
traffic, 45 minutes, right, with our, depending on, what traffic's like.
Yeah.
So those homes are starting at $1 million. They're giving away a free pool, which is $100,000, and they're giving up to they were at 75,000 a few weeks ago in concessions. I'm sure that's increased. So you're seeing big concessions, but I just put out a video on Cadence, and they're selling them so fast they can't keep up. And they don't even have electricity out there, and we don't know when they're going to have electricity now, because all of FPL's over taking care of the hurricane victims in their homes.
For the folks out of state, what's the price point in Cadence, Lee?
It's starting in the high threes, which we haven't seen for 2 years. And you can get a 3,000 square foot home, impact glass, everything, impact glass, concrete construction. It's soft closed cabinets are standard. The quartz countertops are standard. You'll see like the quartz countertops are a little thinner. They're not as thick. That's where they're saving money, but they're not saving money on the finishes. Like there's no tray ceilings, things like that. But the homes still look like they did at Manderley and at Manderley and Emory. Now at Emory, they got huge concessions. I mean, their biggest house, which is almost like 3,600 square foot, it's just a monster. I mean, that house right now, you can get that. They have them in there for 800. They got 2 left. One's 800, one's 850. I mean, that house here in Jupiter, in Palm Beach Gardens, $2.5 million. So I mean, there, a lot of these, especially the 55 and over communities too, 30,000 towards the house, 30,000 towards the lot. You can negotiate with them. So, so you can negotiate with them. So lots of stuff going on there, but you can see that, home prices are leveling down, right? And pending sales are also sliding.
Right.
And then the housing market is far from normal. Here's what 5 economists and real estate think will happen. So prediction 1, mortgage rates will continue to rise. So Brent, they're saying they're going to keep going up.
Yeah. Well, the Fed's going to definitely, they're banging the drum is, hawkish rhetoric today. Governor Daley was out today saying that, we're serious about inflation, and a lot of the surveys we're getting from CEOs and from purchasing managers, that they're saying contraction's already taking place. And so, they're going to be looking in the rearview mirror. We just hope they don't overdo it too awful much.
Yeah.
You've more than doubled interest rates in 6 months. That's a punch,
Right. Well, they've definitely slowed the housing market down.
Yep, absolutely.
I can tell you that. I think if we drop back into 5%, though, 4 to 5%, I think the market's in Florida is going to pick up and start moving again.
Oh, absolutely. I agree 100%.
But I think prices will definitely be different.
Yeah. And you're going to see, okay, rates go up faster than they go down. So,
right.
Because they're going to be, they're being cautious, and so they're not going to jump and pivot and reverse trend. They're just going to let it sit for a while, and then we'll see, it's going to be look-see type thing. And they're going with data, it's rear view mirror stuff. That's how they're determining that stuff.
But if you're a seller out there and you want to sell your house, I have two things I can tell you that I've told my clients, and what I know that experienced real estate agents are telling their clients. Number 1, if you want to sell your home, go ahead and make the price drop to what you absolutely, the lowest price you take for your home. Drop it right now. Don't mess around. Don't go 10,000, 20,000, just drop it to the point that this is all I'm going to, this is the lowest I'll take.
That's what I need. Yep.
Yeah. And if you can't get it, then, and you don't need to move, stay. And if you need to move, rent your home, because we need rentals. I mean, so that's one of the things that's going to happen. We're going to see more rentals hitting the market because people that can't get what they need for their home are going to need to get in there.
Right. They need the cash flow to qualify for another mortgage, you know, so if they're purchasing somewhere else. And so that's a great strategy, though, especially if they're on like a 2.8% interest rate or something. You know, they caught the bottom on interest rates on the 30-year fixed. You know, it makes a lot of sense to hang on to it and buy something else. You know,
I got some comments I can't show when it's free. But you're right. So on that one. Hey, do you know will interest rates will return to pre-COVID? I have no idea, man. I didn't think they'd get this high. I mean, if you weren't on the call at the beginning, I'm getting some slack for some of my videos because Brent and I never thought we would. There's no one in the whole housing market that thought we would be here right now.
No one thought they'd hit 7%, and they're back in the sixes. Yeah. My top was 6.5. That's what I thought the top was, you know, and I think we're almost back down to that. It's heading that direction anyway. I think it's just, you know, like I say, it's baked in, you know, they know rates are going to go to 1.25 higher on the Fed funds. And so, you know, right now they just want to make sure they don't get blamed for all the money they were printing, you know, over the last several years, you know.
Biggest one of the, and then I think we're going to, you know, I'm reading some comments here. You know, these gas prices this oil's coming out of the oil reserves. That's stopping. So you're starting to see gas prices hedge up again.
Well, OPEC
they can't, and then OPEC just cut 2 million barrels.
Right.
So gas prices are about to go up again.
Right.
And you know, I don't think we're not going to see a 2008 crash. It's not going to happen. But what caused the 2008 crash is, think about this. You know, the administration at that time lowered emptied the oil reserves and kept gas artificially low when the election went through. And then all of a sudden gas went through the roof. Remember, we were seeing $4.25, $4.50, and you had all these people in homes. They couldn't afford the gas to drive their car anymore. And then all of a sudden we saw the domino effect start. They couldn't pay their mortgage. And right now I can tell you that I have friends that are on, that you know too, that are on fixed incomes that are feeling the pinch hard. And, you know, I think there was an article that came out. It said a $400 bill for almost 50. What was the percentage of people? It was like 40 or 50%.
50% of the people. Yeah.
50% of the U.S., if they got a $400 bill out of the blue, they couldn't afford to pay it.
Right.
So we're going to see more and more of this happening as we roll into winter, because we don't have enough. Because gas is so much, you know, to heat your home. Natural gas is so much more. So,
yeah.
Look, it is what it is. So also they say there could be a continued deceleration in prices, likely 5% by the end of the year. That's nationwide. I think that could be worse in other spots. I mean, I know, like, I was talking to a real estate agent in Boca on a, you know, woman's got a multi-million-dollar house. They dropped the price $1 million.
Yeah. Right.
$1 million.
Right.
So, I mean, we're seeing $100,000 drops in the farms. So a lot of this is like people, you know, with more, you know, with more, you know, asking more than the house is worth.
Yeah. And a lot of it's case by case, Lee. We're seeing where someone suddenly has to sell property because they're in escrow to buy something else and rates are going up, things like that. There are isolated incidents that are very unique, you know?
Yeah. So, and on the buyer's side, on all this rate stuff, you know, get a good agent, and, you know, not to slap myself on the back, but Brent's watched me do it. You know, before COVID, you know, we were getting $5,000 and $10,000 credits like they were nothing. Right. And
consistently.
I'm going to tell you to help closing costs, VA loans, we put veterans into houses with 0 down. So,
all the closing costs credited. Yeah.
Right. All the closing costs credited. So, right now, if you're with your agent, ask for that credit so you can buy down the rate.
Yeah. I'd say if you want to hold your price, that's a great way to do it.
Yeah. Yeah. And even not even holding the price, if the house will appraise, and they need to sell, there's no reason why you can't pull, 5-10 grand to buy down the rate.
Right.
And that's going to help people. So
that solves their problem.
Right.
That payment problem. Yeah.
And, there's, and if you're looking in the Orlando market, reach out to us, because there's a couple of companies, and there's one that's really good. One of the agents that I work with real close with in Orlando was showing it to me the other day. I hope we get it down here, but there's a companies out there, and there's one that just got going in Florida, and they're all over the Orlando market, and they will buy the house for you and you rent it back from them until you can, and they give you 5 years to finance it. So, that's a great thing.
Yeah.
So that's something that's coming. So we don't have it in Palm Beach County or St. Lucie County yet, but it's coming. So that I'm hoping. But in Orlando market, they're selling, they're buying the houses. So the company comes, you go out, shop with a real estate agent. You buy the house with the real estate agent. The company buys it for you. You stay in it. You pay them the rent. It's less than what you would pay normally. We were looking at the rental prices. It's unbelievable. And then, you have up to 5 years to finance it. So I think we're going to see more of that stuff going on too. So third, there's a lot of variation between markets. So that's what they're saying here, right? So prices were up, depending on the market, they were up higher, and, and then we saw prices start coming down in different markets where people were moving out of. So we're going to see that same thing happen here, I think. Mm-hmm. And then prediction 4, buyers will have less stressful shopping experience. There's no two ways about it. I can put you in the car right now and show you 5-6 houses.
Right.
That fit your criteria.
Yeah.
That's something that has not happened.
And not competing with 15
I can do it here in Jupiter.
Yeah.
It's
definitely changed.
Yeah, it's definitely changed. So that is, that's all I got for tonight. What do you got? Anything, Brent?
That's good stuff, man. I just think, can you pick your spots now a little bit, if you need to downsize or, that type of thing, there are options, that's what we're seeing. Like I say, marry the property, don't marry your rate, date your rate,
right.
Because, always,
and rental prices are not going to go down until rental inventory increases. And the only way rental inventory increases is people don't want to sell their homes and they rent them.
Right.
So that's going to take a lot longer than prices, leveling out. And I think that I can see Palm Beach County leveling out completely for a while.
Yeah.
Staying like level for a while. Port St. Lucie, that's going to keep moving up.
Yeah.
We're going to go through a little bump here in the road, and then things are going to come back. But
I would encourage people to
go ahead.
I would encourage people to just do a rent versus own, analysis and see what makes sense long term, and, put in your numbers over a 10, 20-year period too. I mean, really consider the long term, situation of what rent does and what, home ownership looks like over those terms. And you look at all factors for you, because I think, it's a long haul is the way real estate isn't like buying a stock that's speculative that you're going to be in and out of,
Right.
So,
yeah. And then here's a good one. People need to buy a home they can afford also, right?
Right. Absolutely.
Right.
That's a great point. I mean, you don't want to be house poor, right? You know what I mean? So,
I don't see a 2008 returning. It's not going to return. The 2008 crash was bad paper. There's no bad paper. I mean, you could lose 10%. You could lose 20% equity in your home right now, you'd still have equity if you've been in it for
just 2
pre-COVID.
years.
Yeah,
Oh,
2
yeah.
years.
Just 2
Yeah.
years.
So yeah, there's you're not gonna, and if you're going into foreclosure and get a real estate agent and sell your home.
Oh yeah.
Because letting your house go into foreclosure right now is just ridiculous.
That's ridiculous.
Majority of homeowners right now have massive amounts of equity in their home.
If you've owned your home 8 to 10 months, you have equity. You know what I mean? You could sell it and take care of the closing costs and get out. Yeah.
Right. Yeah. Yeah, absolutely. Yeah. So that's definitely the situation. So yeah. And like this one here, none of that happened. So just so you guys know, no one was able to buy more than they could afford. I mean, there were no extra programs out there. Over COVID, it was just straight conventional or FHA, and you couldn't get an FHA deal done. So nobody bought FHA for the last 2 years unless you got really super lucky.
Yeah, people and their incomes were all verified. There's none of the stated stuff that was going on pre 2008. So that's the big difference. Literally in 2006, you could buy a home 0% down, nothing down. They called them 80-20 loans. Stated income was 0 down with a 580 FICO score. So a poor credit history, no money of your own, and you could tell the lender how much money you made. So that was just a recipe for disaster.
Recipe for disaster. I mean, and people called it in the market when it began. I'll never forget. I was in West Virginia. My mother-in-law was sick. I'm watching Neil Cavuto one day, and the real estate guy with the white hair, he passed away. Really cool.
Yeah.
Neat guy, but real estate guy, right?
Yeah.
And Neil's on with him, and he's saying, "Hey, Mills like, well, and rates had just dropped to 4.25, right? 4.25. Think about what I'm saying to you." And Neil's on saying, I'm a little concerned about this rate drop and also all of these loans that are being issued, especially these interest only loans. And he's like, "Oh no, man, it's not a problem. The market's moving so fast. It'll be fine. Don't worry about it." And then gas prices went through the roof and bam. And all that bad paper that was being sold to the insurance companies and to Wall Street came back on them, and nobody went to jail.
It's amazing to me.
Nobody went to jail.
The bond rating companies.
Nobody goes to jail, right?
They were rating these bonds, these mortgages as A paper, like quality paper, and they were selling it to pension funds. How someone
destroyed people's lives. I mean, how many people and we did deals in Port St. Lucie, I mean, rich people. We had clients that were rich, and the foreclosure wasn't even on their credit. We had one woman, her husband had her sign a power of attorney, and she trusted her husband. He went and bought 3 houses. She had no idea, and they weren't even on her credit because of the fact that the banks, they were foreclosing so fast on property that they weren't even able to put it on the credit. I think it was what's the bank with the Wells Fargo. It was Wells Fargo. And do you remember?
Yeah.
And we went through the whole process, and all of a sudden when they went in and looked at everything, they found the deed with her name on it and the foreclosure, and she lost her. We could not get her deposit back because we were beyond you, because you'd
down the road
been able to you had already given her a loan approval.
Right.
And it was after the fact. And then we were running into people come on, Brent. It was just like 5 years ago.
Right.
I would say 5 years ago, we saw our last client that had a foreclosure from one of these crazy loans, these interest only loans.
Right. That's it. Yeah.
The amount of people that lives were destroyed because of this, and nobody went to jail. Nobody went to jail. And
I
so,
saw situations. People were calling me, "Hey, can you get me out of my loan?" And I mean, these people were like working day laborers and housekeepers that were making $2,000 a month each, 4,000 total with $750,000 house, or $750,000 mortgage. They put nothing down on.
nothing down.
Yeah, and
I know a ton of people that foreclosed, and then they were losing the actual loan. I have one of my buddies in
Oh, yeah.
Hope Sound. He got his house for free.
Yeah.
They lost his loan.
Right. They were, the robo stamping that they were doing on the deeds and
Yeah.
stuff. It was how no one went to jail on that. It's just unbelievable to me.
Yeah.
They're large companies doing really strange things, So
How did banks allow stated income without verifying it? Because they were deregulated by the federal government.
right.
And that's how it happened.
Right.
Federal government gets in the business of business, and it always goes bad. Sorry.
Yeah.
Government, period. Government's job is to protect us, educate our children, and stay out of our way so we can make money.
Yep. And the idea was, everyone needs to own a home. And, frankly, if you can't afford the payment, you can't either, you shouldn't buy a home you can't afford that it's not going to end well. And that's a shame, but that's the reality. And it's,
well, I think the banks have learned their lesson.
Mm-hmm.
I don't think we're going to see that happening over here. They're just going to find ways to make things work for people while rates are so high.
Mm-hmm. Right.
I don't see them. And you can see already with Freddie Mac, Fannie Mae, they're already out there helping these people. They're, what are they going to foreclose on? Somebody's destroyed home. But Port St. Lucie, if they foreclosed on the whole city. So if you wonder why taxes are so much higher in Port St. Lucie than anywhere else, it's because the infrastructure was completely destroyed, and the city had to raise taxes. I think they raised taxes 3 or 4 times. I know they raised at least 3 times. And Susan, how many times did they raise taxes? But I know they raised taxes at least 3 times to get the tax rate up to where it is now at 2%, so that they could hire police, clean up the city, and get things straightened out, because the city was in total shambles and destruction.
Oh, the crime was outrageous. What, in 2010, 2011? I mean, they've done an amazing job turning it around, though. They really have.
Yeah. No. So, well, anyways, with that said, thanks for joining us today on our podcast here. We'll be back next week on Wednesday with more updates on the market. And I hope everyone enjoyed this show. And if you did, give us a thumbs up. We really appreciate it. And if you have not subscribed to the channel, go ahead and slap that subscribe button, ring that notification bell, jump over to Brent's channel at Brent Starts Unitas Lending. You can find it. And, he's updating you every day on, 3 times a week, right?
3 times a week in the Market Minute. Yeah. And we have some lessons in lending for people in the process of, just exploring what it's like to purchase a home and how it works.
Yep. So there's a lot of good information on his site. So jump on that. You can click on it at the bottom of mine, or you can go over to him and subscribe there. And he's got a lot of good information over there. And these videos are streaming over in his channel also. So we appreciate everybody coming on, and we'll see you next week. Be kind to each other. Go, if you got a couple of bucks, throw it into the Red Cross. Go to Wawa, buy something from them. Throw an extra $3 or $4 anywhere you can. Just throw $1, $2, $3, help some people out. It's a bad situation over there. You can't even, the pictures on TV, I promise you can't even, but they don't even come close to what it's like and what these people are going through. The devastation is just unbelievable. So hopefully we can strengthen the walls of Florida and get some things done so we don't ever see this happen again, because we're going to see hurricanes, but we don't need to see this kind of devastation, I think. Right. So thanks for joining us again, and we will see you next week. And again, be kind to each other.